Hey everyone, John Henry here, slingshotfutures.com. Today we're going to be talking about an interesting subject on FOMO, right? Fear of missing out. If you've traded for longer than 10 minutes, you probably know the feeling. We've all been there before. But what we're going to be covering is how to deal with FOMO. One of the biggest things that people run into is, they get this fear of missing out and the move is just running and running and running and running. And by the time they finally decide to get in, it's way too late. They bought the top, and now the market's pulling back against them. Very common. I've done it. You've done it. Everybody who's traded has probably done it. It's something that happens a lot. So one of the big things to deal with FOMO is simply just to make sure that your risk is staying in alignment. One of the biggest things that I find for myself is that when I'm looking to get into a trade and a market's just, it's exploding, it's running away, and it just keeps going and going and going and going, what I do is I look at it and say, okay, well, normally I'm going to trade 1,000 shares, or normally I'm going to trade 3 contracts, or your normal size that you're used to trading. What I'll do is I'll go in and I'll trade as small as I can, just to kind of scratch the itch, if you will. So a great example was on gold, right? Now, I didn't take this trade. I really wasn't watching it at the time. I'm not a huge gold fan personally. But gold was just flying higher, right? Gold is just ripping higher. And with this breakout move, there's going to be a ton of FOMO on the way up. Traders that wanted to buy down here or maybe down here for whatever reason, they see this move, they're like, crap, I just missed this giant move. Look at all the money that I left on the table. And they start beating up on themselves. Well, the problem with that is now they're starting to try to convince themselves, maybe subconsciously, that I'm going to look for anything I can to get in. Well, that might not happen until right here, right? Or right here, or right here. Because they finally worked up enough courage to go in and say, okay, you know what? Fine, I'm just going to buy it. Fine, I'm just going to buy it, right? Well, what ends up happening is that doesn't happen until right about here, and they bought the high of day, and it starts pulling back against them, and they get their butts handed to them because, well, they let FOMO get the best of them. So what's a constructive way that we can approach this? Well, let's say as an example, futures might be a little bit tough because you can only split them up so much, but let's say as an example, you're normally a 4-contract trader, right? You're seeing this market go and go and go and go, and you're buying high, but it just keeps going higher. Well, the best way to scratch that itch is to go in and say, okay, you know what? I'm not going to take 4 contracts because I just think that's too much risk. If I'm going to be chasing a trade, I'm going to be chasing it with really tiny size. Now, again, futures are a little bit difficult to get away with that on because you can't go in with 100 shares if you normally trade 10,000, something like that. But if you're trading 4 contracts, you jump in with 1 contract, right? Keep the risk really limited so that if you are wrong and it does start pulling back against you, you're not giving up your entire day's worth of gains. You're giving up a small portion of them. You're not giving up everything. But at the same time, if it keeps going in your direction and it is a runaway market, you don't miss it either. You're putting something in your pocket. You're scratching the itch without putting a huge amount of excess risk on the table. Now, another great example would be on a stock stocks are a little bit easier because you can kind of get away with trading really small size, but Intel, right? INTC. Intel was flying higher today. Pre-market, it was way up, and after the market opened, it just continues to rip higher. Well, if you're looking at this saying, man, where am I going to buy into this? I don't want to buy here because I think I'm buying too high. And then this pullback, for whatever reason, doesn't look good enough, so you skip that, and it starts breaking out to new highs. You're thinking, okay, well, I don't want to buy here because now it's high again. And you keep this revolving door. Instead, look at it and say, you know what? Okay, I know this is breaking away. Normally, I would trade 1,000, 2,000, 3,000 shares. I'm going to buy 100 shares, right? Just really tiny risk. Buy 100 shares here and let it do its thing, right? Put your risk where it needs to go. Put your stop in if you're a hard stop trader and just let the trade work. You scratch the itch. It takes and alleviates that pressure off of your shoulders of, man, I gotta get into this trade. I got to get in because I'm missing it. You're not missing it, but you're also not putting a huge amount of risk up front because you only went in with 1/10 of your normal size. So what can happen then is that you're still in and you can start making conscious decisions. You're not making decisions feeling like you're under pressure. You're making the correct decisions that you should be because you scratched that itch, right? It's a huge psychological game more than anything else. But because you were able to do that, when it rips higher and you see this giant exhaustive move and it starts failing, you can exit and still pull out 30, 40 bucks. Better than nothing, and it scratched the itch and it prevented you from taking a bad trade, which we all know the FOMO traders probably bought up here, hoping for another breakout, and then they ate it when it came back down again. So it's something to definitely consider. Another thing to consider if you're a bigger fan of really protecting risk, or if you're just a newer trader who doesn't have that capability yet. Maybe your account size isn't big enough to take those types of trades, or maybe you're only a single lot trader on the futures, right? You can't afford to go in one because that's your full size. Really, if that's the situation, it comes down to simply closing the chart. If you can't see it, it can't bug you. And I know that's a lot easier said than done, because there's been many times where I've closed the chart and then reopened it again, and then closed it and reopened it again. Fight that urge and really push back. If you can't take that risk on your account, even going small, or maybe it's not a possibility, i.e. futures, where you can't go into fractional contracts, then close the chart, right? Get rid of all of that pressure by simply just ignoring it, right? You can't see it, it can't bother you. And that's kind of the other mentality to approach it as well. If your account size isn't up to that point where you can start taking those risk on, but low risk trades, like jumping into Intel with 100 shares or something like that. Something to think about, something to consider, and if you find yourself as one of those traders that tends to get FOMO a lot, you might want to consider something along these lines of taking really small risks, jumping in with 10 shares if you have a smaller account, and just letting it do its thing. You may not overcome the commissions if it's that small, but at least you're scratching the itch and you're not putting yourself in a situation where you're going to take a horrible trade and blow your whole day up because you took it at the wrong place. Something to think about, again, and whenever it comes to risk, your account and your personality have a big part in it. So make sure that it fits you as a person. And like I always say, and I have to say, I'm not a financial advisor, right? It's just use a little bit of common sense. Don't go in if you're chasing a trade with FOMO and drop your full 100% account exposure on the table because you probably just bought the high. Outside of that, though, I hope you found it interesting, useful, entertaining, something you can add to your tool belt. As always, underneath the video, give us a like so it shows that you like the video. Along with that, subscribe and click the notification bell icon so you are notified every time a new video comes out. Otherwise, I hope you had a fantastic trading day today. Enjoy the rest of your day, and we'll see you all in the next one. Thanks.